traders, Mark here. I am sure a lot of you are wondering, where in the hell have I been? Well, let me tell you. So I got offered an opportunity that honestly I couldn't pass up. A mentor of mine who I've known for about 10 years, he's a large angel investor in the city that I live. And he's involved in a startup that is on the cusp of transforming healthcare, and they're growing like crazy right now. And he approached me with an opportunity that honestly I couldn't pass up, and it's a pretty exciting opportunity, gang. If everything goes right, then this company will have a true impact on the way that healthcare is delivered for good. And so that's pretty exciting, because as we all know, currently the model in healthcare is unsustainable. We have rising costs and a decrease in quality, a horrible combination. So anyway, that is where I've been for the past couple months. Needless to say, I miss trading. I miss talking to you guys. I miss running my room. So what have I been up to? Well, because I'm working in an office now, I have to transform the way that I trade. So what I've been working on is automating a lot of the things that I do. Now, you guys are familiar with my old system, the PPT system with the LCP zones. So what I've tried to do is I've tried to take these zones and I've tried to refine them. Now what I did is I added a volume component to them and a price action component to them. And so what you see now is a truly automated version of the zones. The other thing that I did was I changed the way that I looked at risk. Anybody who's watched my videos knows that I believe there is a holy grail in trading. And I believe that holy grail is the way that you manage your risk. You know, I find it funny, and I'm going to dig more into this over the course of the next few months, because I really want to transform the way you look at trading. Because if you're like me, you had a big misconception. And what's funny is the startup that I'm working in, the reason that they're successful is because the healthcare world has a misconception. And there's a similarity between the healthcare world's misconception and the retail trading world's misconception. Now, the similarity is we're focusing on the wrong statistics. So I'm going to walk through just a couple trades so that you get an idea of how this system trades. Okay, and then I'm going to pull up a spreadsheet and I'm going to show you some numbers. So let's first walk through the system. So just like my old system, I have a higher time frame chart, but I have two of them, okay? I've got a 15-minute and a 5-minute. And then if you look down here, you see this trend direction indicator. Now all I want here is I want them both to line up. So if I want to be looking for shorts, I want my 5-minute to be red, and I want my 15-minute to be red. Then what I do is I come over here to this chart and I wait for price to get within 2 ticks of a red zone. And then all I look for is either a PPT bar or just a down red bar. Either way, I'm taking a trade. And what I do is let's just say, for example, let's say this was a red zone, and let's say that these are both red. Well, this is a PPT bar. So what I'm doing is I would put a sell stop 1 tick below this bar at 73.50. And I'm using a 7-tick stop Okay, so think about that. This is the NASDAQ where each tick's worth $5. So I'm risking $35. Now, I am comfortable risking 1.5% of my account. So what that means is I can trade this with a $2,500 account. So every contract in my mind equates to $2,500 in my account. So I'm risking 35, which is 7 ticks, and I'm trying to make 40. You heard me right. I'm risking $35 to make 200. So my risk reward there is almost a 1 to 6, right? I'm risking 1 unit to make 6. All right, so let's just find a trade here. So you can see at this point, my 5-minute is red, my 15-minute is white, which is neutral. So I can't trade. Okay, so let's just follow this along. Okay, no trades, no trades. My 15-minute is still neutral, so I'm just sitting on my hands, right? Okay, at 9 o'clock, at the close of this bar right here, at 9 o'clock on the 15 minutes, so the close of this bar, which opened at 8:45, it closes at 9 o'clock. So at the open of this bar, my 15-minute is now red. Okay, so I'm red and red. Now I want to see a red zone, which I get right here. I want to see a PPT bar, which happens right here. So my entry here is going to be 48.25. Okay. Now look what happens here. They actually come up 7 ticks and stop me out. So I'm stopped out. But I'm going to re-enter again. 48.25 again. And then this time, clearly, I get my 10 points. Okay. So that is the gist of the system, all right? It's very simple. Frankly, anyone can trade this. Now I want to walk through some numbers, and then I want to show you the same zones on a 12 range chart. If you want something simple, the 12 range is awesome. Okay, so now let's take a quick look at some numbers. Okay, so what I have here is 5 weeks and 1 day worth of data. Here are some numbers: 37 and 8, 28 and 8, 19 and 8, 21 and 4, 63 and 18, 20 and 3. Now, I don't know what you're thinking right now. You might be thinking, man, those numbers are incredible. And they really are. But I'm going to throw a curveball at you right now. My guess is that some of you thought that this was the win column and this was the loss column. You're wrong. These are my losses. These are my wins. If we sum these up, it's 188 losses and 49 wins. So we have a total of, I should have done this math before I did the video, but we have a total of 237 trades, and I have 49 wins. So let's do the math here on the percentage. So it's actually just under 20%. You still think it's awesome? I mean, honestly, I want you to really think about this. So remember before I told you that the column B were losses and in column C were wins, I said that you're right, these numbers are awesome. Now, why in the hell would I say that when clearly I'm only winning 21%? Well, let's dig into this just a little bit more. So if we look at our gross wins, so I'm going to take my 49, so you can see the math here, C8 times 200, just almost 10 grand. Now let's take our losses. You can see the math, B8 times 35. Now let's take out commissions. It's $5 per contract per round turn. And then I know from experience trading this that I'm going to get slippage of 1 tick per every 4 trades. I already know that. So if we add this up, that's my net. Now remember, I also said that my account, I need $2,500, and I'm only risking 1.4% per trade. So my risk here, in my opinion, is pretty conservative. So let's just look at a return. I don't know why that is still white, but I will fix that. So we're going to take this, and we're going to divide it by 2,500. And then we're going to make that a percentage, and we're going to make it so you can see it. You impressed yet? So how is it that I can trade at 20% and still make a 70% return in 5 weeks? Now here's where it gets really fun, guys. So you all know, I mean, you've been following me long enough, that in oil I always risk $150 a contract. Okay, now I was risking 150 to make 150, and then I would manage my risk very aggressively. Now there was actually a time before I got my teeth kicked in back in March that I was risking $900 per trade in oil. Okay, that's only 6 contracts. So let's do some fun math here. So let's first take a look at what the numbers look like if I'm just risking what I normally risk in oil. In fact, it's only going to be a 140 risk instead of a 150 risk. So here's what those numbers look like. You know, that's your 70% return, right? Because if I'm trading 4 contracts, which would be my 150 risk, I have a $10,000 account. Okay, now here's where it gets exciting. What if I actually risked what I used to risk in oil, which was $900? Well, I'm going to need a large account. By my math, I need about a $60,000 account. So let's get a little crazy here. Let's take this equals this times 25. So you can see here, if we take 25 times 35, that's $875. So that comes out to be about what I used to risk in oil. Right? I used to risk $900. This is $875. How many of you would like to have that in 5 weeks, and you're only winning 49 out of 237 trades? Not bad, right? Okay, so now I want to show you the 12 range chart. Okay, here's the 12 range chart on the NASDAQ. Now this is going to trade a little bit different, but these rules are still very, very simple. I can do this off of just one chart, and the benefit of this is I could manage 4 markets very easily. In fact, I can automate this. For the most part, I would think it'd be very easy to do. Here's what I'm looking at. So we need to find 830, which is right here. Here's my 830 bar. Let's go to the hard right edge a little bit further here. So here's my 830 bar. I have a green zone. So I'm going to trade the green zone as long as I've taken out the prior red zone. So here's my prior red zone. It's been taken out. And for me, the definition of taken out means I have a full body close above, which means if I have a red zone, the open of that candle is equal to or greater than the high of the channel, and the close is greater than the high of the channel. Okay, everything has rules, right? So now I'll be looking for a trade here. Now I have to get within 2 ticks of my zone. And then what I do is I'm going to place a buy stop 2 ticks above the high of this candle. So it'll be at 82. My stop on this is going to be 3 points. So I'm risking $60. My target, 15. So I'm risking 60 to make 300. So it's a 1 to 5. So let's just take a look at today. So 77.50, 78.50, that's 4 ticks. So this is not a trade. We pushed through. So because we broke this green zone, I'm now looking to trade a red zone. And I'm going to trade the red zone until my most recent red is taken out. So I would not be looking for longs now until the high of this channel is broken. So I would take a trade right here. And I would have been stopped right there. I'd take a trade here, and then this trade goes on to target. Okay, so I've got 1 winner and 1 loser. And then I'd get another trade back into this channel, so I'd be short here again at 61.25. So now I have 2 winners and 1 loser. And then we move down, we move down. Let's see, does this one come into it? 33, it does not. I'd have a trade right here. That would not have hit target, so we've got 2 and 2. And then look, I break this red channel, so I'm going to take a trade here. So now I have 3 losses and 2 winners. Okay, I broke the green channel, but I'd never got a down red bar in here, so no trades. Okay, now I could take a trade back into the green. So I'd have a trade right here for a loss. I'm losing track. What was that? 4 and 2. I have another trade here and another trade here. And then another trade here. So we have, oh crap. So this is 4 and 2. This is 5 and 2. 6 and 2. 1950. So I would need 34.50 here. Let's see. Nope. Okay. So what was that? 7 and 2. All right. So now I've got 7 losses, 2 winners. I hope I'm doing this math right, guys. I'm sure somebody will correct me if I'm not. Okay. No trade in here. Does this one get within 2 ticks? No. Okay, this one does, but I don't think it's going to hit target. So we got 88.75. We've been stopped out, so we're 8 and 2. I'd be back in on this bar, guys. This channel, these aren't printing correctly. This should still be printing to the right here because it hasn't been taken out. So I would be back in on this bar at 90, at 80, 89, 50. Oh man, that's a shame right there. Look at that. 89.50 was 1 point away from target. Regardless, was at 9 and 2. Okay, so 9 and 2. Okay, so I'd have actually, you know what? There would not be. Wait. Yes, so I'd have a trade right here. So now we're 10 and 2, and then a trade right here. 91.25. Okay, so that one hits target. So now we're 10 and 3. Then I'd take a trade here. That's a loss. 11 and 3. Let's see if this is 2 ticks. It is. 12 and 3, 13 and 3, 14 and 3. I've traded. Oh, nope, that's only 1 tick below, so that doesn't trigger. So wait, 13 and 3, I think. So 13.50. Okay, there's a winner. So 13 and 4. I'd have a trade here. At 95.50. And you get down to 80. There we go. Nice. Okay, so we're 13 and 5. No trades in here. Let's see. Is this 2 ticks away? No. 3 ticks. And that's the close of the market. So what we got? 13 and 5, right? So let's do the math. So we got 13 times 60. Times 60, $780. That's a loss. So we have 5 times 300 is 1,500. Okay, so what we got there? 13. So 18 times 5 is $90 in commissions. Okay, and then slippage, we have 18, so we'll call it 5 ticks. So that's going to cost me another $125. So for a net profit of 1,500 minus the 780 minus the 90 minus the 125. So $505, risking $60 per contract. So clearly, gang, if I'm just risking $120, it's a $1,000 day, and that's on a $5,000 account, which is a 20% return on the day. Now, I can do this with the YM. I can do this with the Russell. I can do this with oil. Okay, I can do this really with any market. That is the nice thing about these zones. Anyway, gang, I'm sorry for the long video. Maybe I should have broken this up, but I'm going to try and get back in the habit of doing some more videos because I want everyone to learn from this. This was a true mental shift for me personally, and I want all of you to make the same mental shift, because unless you do, you're always going to be focusing on the wrong trading statistics, and you're going to struggle as a trader. Okay, so let me just kind of tell you guys where I am. I am finally getting accustomed to my new schedule after about 2 months, and so I really haven't been trading much at all. I'm going to get the L24 back up and going, and I am going to get this to where I can trade it more. I'm actually going to be hiring a trader to trade this for me. Now, I'm thinking about maybe opening up a room and bringing in a bunch of people for free for quite some time. All right, gang. I hope y'all are doing okay, and it felt good. It felt good to get another video out there, or get a video out there. It's been a while. I'll talk to you guys soon.